My name is Michael McCrae, Mining Audience Manager at KITCO. KITCO, your number one source for precious metal news. You're at the Mines and Money Precious Metals event. Next up, a panel discussion on silver investment outlook for 2021. Could not be a better time to talk with silver prices up 5% today. After the GameStop saga, where a group of Redditors bid up GME to thwart short sellers, there are some signs that the group is alighted on silver. I want to hear from our distinguished panel on their thoughts. We will also step back and talk about currency risk and how silver is tied to gold. Silver is also a key ingredient in energy transition needed for solar panels, automobiles, and other high tech. I am with David Morgan. He is CEO and founder of the Morgan Report. Christopher Ecclestone, he is principal and mining strategist at Hallgarten and Company. Claude Bejet, he is junior mining newsletter writer. Ian Williams, chairman and chief executive officer at Charteris, Treasury portfolio managers. I'd like to start with you, David. What's driving the spike in silver today? I see Pan American up 8%, First Majestic up 19% as of mid-afternoon Eastern time.
Well, Michael, and thank you for inviting me in the panel as well. I would have to say the most sounding trite answer, but absolutely correct, is there's more buying pressure than selling pressure. That's always the case to drive a commodity or stock price higher or lower. And then if you can want to get into the idea behind it, most of the time you've kind of got to guess, because you'd have to ask each individual, why are you buying or why are you selling? And take a poll and figure out what the consensus would be. In this case, as you alluded to, there's a lot of chatter on the Reddit Wall Street Bets focus group talking about jumping on silver like they did GameStop. Obviously, with gold flat today and the other metals up slightly, silver taking the lead with such a large percentage, and the equity side, as you mentioned, obviously that's, in my view, taking place. So it is a small market, doesn't take a lot of buying pressure. There is buying pressure, obviously, and that's taking the price higher.
I just thank you very much, David. I just want to throw it to Claude, but just a short piece of housekeeping. This is a question and answer format. Audiences, we'd please appreciate your questions. So please throw it to the moderators, and I'll be happy to get to it. And we can bring these people. We can take advantage of this panel. Claude, can you talk about the move of silver today?
Yeah, so just to bounce on this short squeeze going up, it's rather fun to talk to all of you today, because as David knows, we've been hearing about these attacks. All the gold bugs, the silver bugs have been complaining for at least 50 years that the gold price is suppressed by shorts, the silver's futures are attacked, and this time it's our turn to be in the driver's seat. So it's a nice change. Of course, the stock that ran up the most was the most heavily shorted. It was First Majestic. There was a 24% short interest coming into the new year. And what's really remarkable is that last week, 65 million shares traded hands, which represents 25% of the float. And although all that happened, you would have guessed that there would be very little short interest left. But in fact, there still is, I think, something like 23% short interest. So we'll see how this thing pans out. So I've always recommended First Majestic for its high beta to the silver price. So it's always a great stock to buy when the silver price is going up. And today is no exception.
I will note that the First Majestic did put out today a notice just regarding how would you say, an attention or alert just regarding unusual movements, and nothing that was nothing that was pressing or material just regarding that. But terrific moves at First Majestic. Ian, I should just one more housekeeping note. Christopher Ecclestone with Hallgarten is with us, but he has a problem with his video camera, but we will be hearing him from on the audio. Ian Williams, are we really in the driver's seat right now?
Yes, I mean, with our fund that we run in the UK, there's about 7 or 8 gold funds in the UK, and ours is got far more silver exposure than any of the others. We've got about 60-70% exposure to silver and only about 30% exposure to gold. And what we've been doing for the last year or so, or the last 2-3 years, we've had tended to be in the mid-cap space, or $500 million to $3 billion market cap size. But in the last 6 months, what we've been doing, we've been allocating about 1% of the fund to about 20 junior $100 million market cap silver stocks, because this is where we think the real price explosion is going to be. I mean, we think one of these stocks is going to be a 50 bagger. The only problem is we're not sure which one. So, yeah, we think that's where the big money is going to be made. It's in silver, not in gold. If you look back at all the historical relationships, what you're talking about, last time gold was at $2,000 an ounce, silver was at 50 in 2011. Now gold's been up around that level. Silver's only $25. The gold silver ratio, everything points, the future demand for solar, what you've been mentioning, everything points to silver being a big catch-up trade. And I think what you're seeing today with all this Reddit crowd and everyone jumping on the bandwagon is just really a sort of people alighting on where they see some value and starting to put it into action. So technically, another thing, I sent out a note last week internally. For the last few weeks, silver's been in a narrowing price range. The price range has been daily price range been getting smaller and smaller. When that happens, moving sideways, all the moving averages converge. So the 100-day moving average, the 50-day moving average, 20-day moving average have all converged, so they're all the same. And when you get that price action, it moves sideways for a while. It's always followed by a big sharp move. Can be up, can be down. So we were expecting a sharp move. We were pretty sure it was going to be up, and it looks like it may have started today. So technically, we were sort of expecting this move. We weren't sure what the trigger was going to be, and we weren't sure when it was going to be. It's just a question of, like a sailor, you wait to see which way the wind's blowing, and you set your sail. But we were fairly sure it's going to be up. So we were sort of half expecting a big move, sharp move anyway, just based on technical analysis, nothing to do with this Reddit news. So that's the catalyst.
Christopher, I'll let you have the last thoughts on this segment. We're talking about what about the recent move in silver?
I've been a big fan of the silver physical ETF SLV for quite a while now. I think that's one of the best exposures, and obviously it's the name that's been mentioned by the Redditors. I've been watching closely with fascination the events on Reddit and correspondingly on Wall Street, and I'm loving it, I've got to say. But one thing is to play in the the hot stock of the day or the week. Silver is a much longer play, and if the short, or the enemies of shorters in the Reddit crowd think that they're going to clean out the bad guys in the space of a few days with some sort of like 5,000% increase in the silver price, it is not going to happen. It's a much longer trade, and they will get bored with it before it gets to where they hope it will go, if they even have any perception of where it might go. Because as we've seen from quite a lot of this, it's emotionally driven, it's a trade of the day, it's all very visceral. And while we as silver bulls may feel that our fondness for the metal is visceral as well, it's much more long term. And we know that you have to take the rough with the smooth, as we've seen in the decrease of silver from the $50 levels of back in, I think it was 2011. Having said that, the perspectives are good. I mean, just this year, we've had this dramatic improvement in the gold-silver ratio, which I regard as one of the key indicators. And it's looking pretty good today, but it needs to keep on doing that. As for First Majestic, one of the stocks I hate and loathe the most, I wouldn't be shorter of it, but I'm definitely not a fan. Thank you.
Thank you very much, Christopher. I see some questions coming in, and it's great. Please keep those questions coming. A lot of questions for the panel about where they see silver prices and how you invest. I'd like to tease that out towards the end, but we will get to it. I really want to set up the thesis first. Christopher did mention it, but let's go back and then revisit fundamentals. David, what is the silver gold ratio, and why is it important, and what does it signify?
Well, it's a simple ratio. It's a division problem. It's basically how many ounces of silver does it take to purchase 1 ounce of gold? And if you go back to March of 2020, it got to a record high of about 125 ounces, or the ratio is 125, which meant 125 ounces of silver to buy 1 ounce of gold. That was only achieved once before in the Great Depression. And usually those type of events are spikes, which it was. And I said, now's the time to get in if you're trading or even long term. And of course it was, and the ratio got down in the low 70s by the end of the year. So silver outperformed gold and all other precious metals last year, with maybe the exception of rhodium. I'm not sure. The trend continues. I think, I don't want to misstate this, I think it was Christopher that mentioned it, but one of the panelists, that when you're in a bull market, silver does outperform. So it's confirmation we're back in a bull market for several reasons. I won't give you all the technicals, but they're there. And then on top of that, the ratio will continue to narrow, which means at the end of this year, rather being in the low 70s, we might see a 60-to-1 or a 50-to-1 ratio. At the top of the market, it's a fool's errand to try and suggest exactly what it'll be. But if you go to the last historic bull market in silver, it got to what I call the monetary or classic ratio of about 16-to-1. So the way I look at it, silver will double, redouble, and double again. We're going to be in a ratio where you're probably going to be 30 or less. I could say 30 with some confidence, because we've already been to 33-to-1 in this bull market. It wasn't there long. That was a spike. But usually the last leg of a bull market is twice as good as the previous leg, which suggests a 16-to-1 ratio. So I'll leave it at that.
Ian, David did mention it just regarding gold. Could we take that piece first? I also want to get to some of the other drivers, and we certainly talked about the recent price action just off of GameStop and Reddit. But let's revisit again. Silver is a precious metal. It does get pulled forward by gold. What are some of those themes regarding how would you say money printing that looks so bullish for silver?
Okay, well, gold, this QE, the latest QE4, is far more bullish for precious metals than the previous QE 1, 2, and 3. QE 1, 2, and 3 was spread out over 6.5 years, and they took the Fed's balance sheet from $1 trillion to $4 trillion. This one has gone from 4 trillion to 7 trillion and is on its way up to 10 trillion in the space of less than a year. It's far more intense. The previous QEs tended to more, especially QE1, was more concentrated in bailing out the US banking system. This time, the money's gone straight directly into consumers' bank accounts. So it's gone into the wider economy. The previous QEs 1, 2, and 3 never really saw increase in the wider measures of the money supply, just really the narrow measure M0. This time M2 in the States is up 25% last year. So this is real inflationary monetary stimulus now, unlike the previous ones. I mean, put it in layman's terms, if the Fed print or the Bank of England print £1 billion and bury it in the courtyard, it doesn't cause inflation. They may have printed the money, but if it doesn't get out into the economy, it doesn't tend to cause too much inflation. Although there is evidence it's caused asset price inflation, but consumer price. This time round, you've got every single evidence that you saw. We've got to go back to the 70s, classic cars, coins, paintings, anything that is non-fiat money, a non-monetary asset like a government bond or cash, is absolutely exploding in price. In the UK, we've got house prices up at 8% year on year in a year where no one's been able to do any viewing. It's just, so everywhere you look, there's inflation. All the base metals are up, all the food prices are up. Food prices are up 50, 70% since March. So everywhere you look, there's inflation. Now, gold has already participated in this more than the other metals. Silver, being semi-industrial, has almost been tied as closely to the copper price and the zinc price. So there's a big catch-up trade. And the central banks, the Russian central bank, have been buying gold. They're not going to buy silver. They're not going to buy copper. So you go to one sequence of buying due to, whenever you get these inflationary pulses, it's always the first rush is always into gold. So gold's had a big move. And now what you're seeing is a spillover into all the other commodities. And eventually oil will join in as well. But this is your classic rotational bull market. And silver is sitting there as the one, it hasn't gone up like gold. It's sitting a sitting duck waiting to get revalued. And there's a tremendous amount of money. The other thing that's obvious is, although silver is potentially going to go up quite a lot, the mining stocks are so cheap relative to the metal. So there's not just money to be made by being long silver. There's far more money to be made by being long of these mining stocks because they're all making huge profits. We've been looking at one today. It's got all-in sustaining costs of $8 an ounce, and the silver's $25, potentially on its way to 30 or 35. So the operating cash flows that these companies spit up is going to be sensational, more than any other industry around. Most other industries in the COVID pandemic are suffering. This industry is potentially booming. It's never made so much money. So it's only a matter of time before investors highlight in this. And some of the moves in these junior silver stocks are just going to be explosive. They're going to be mind-boggling.
I want to get Claude's thoughts on the same theme, but just to follow up on something you said, Ian, you said that, I think it was that Russia banks, they're not the people that would be buying the silver. Could you expand on that?
No, the central bank, the Russian central bank, for 2-3 years decided, because of threats of sanctions, they had about $600 billion in US treasuries. And their big fear maybe was that Trump or someone would confiscate it or freeze it like they did with the Iranian assets. So Putin took a decision to switch all the treasury bonds into gold, 600 billion. And then the gold price started going up, the treasury started floundering around a bit, and the Russians have made a lot of big profit on this. And then other central banks started to think, hey, that's a pretty good idea. We don't want to be subject to US sanctions. We're going to dump US treasuries. So it made sense in geopolitical reasons, but it also made sense on economics as a trade. What's happened is that other central banks, but central banks will only buy gold. They won't buy silver, they won't buy copper and put it in their vaults. So you've had a big leg up in gold that wasn't followed by the other commodities. But what's happened since in the last 6 months is the other commodities have started to kick in, and they're now catching up. So some of the move that you've seen in gold is now going to be repeated in some of these other metals as well. And our two favorite metals are silver and copper, because not only is there a cash up trade, but when you look forward to decarbonisation, as you pointed out, you can't make solar panels without silver, can't make electric car without copper. So there's going to be enormous demand for these two metals in the future.
Claude, as Ian put it, there is a number of hard assets that can be invested in if there is a currency risk. How do you view silver fitting in amongst all of these other types of investments?
Yeah, well, what's really nice with silver is that it's really cheap. I mean, gold is, $1,800. And if I wanted to invite all of you, so we're 5 here, I invite every one of you in a little cafe in Lausanne, and it's going to cost 1 ounce of silver. That is extremely cheap. It doesn't make any sense because silver will, silver fluctuates, as you know, and it changes status. So today, silver is viewed as, let's say, half a monetary metal and half as, commodity. Now, as this bull market progresses, it'll change status and it'll go to be only a monetary, essentially a monetary asset. And then I tell you, I'll be with 1 ounce of silver. I'll be able to invite all of you to more than a cup of coffee, probably a dinner or a couple of suits. Ian has a fantastic way to run his fund. He knows that silver always outperforms gold, and this bull market will be not an exception. So that's a very smart way to run a portfolio. And I think his key idea here is that what will have the best leverage is, of course, the junior silver stocks. And that's where I specialize myself. I mean, just recently, I was invested, I'm a consultant to a company called El Oro, and they're in Bolivia. Now, Bolivia has a new president, which is mining friendly. They have a property 180 kilometers from Potosi, 50 kilometers from Pan American Silver, 200 kilometers from the other producing silver mine, Sumitomo. And they just drilled 20 holes. And since June, the stock went up 20 times. So maybe Apple will go down 90%, but it's in the stock picking in the junior space that the most money will be made. So I think that's for every viewer, an important thing to know. Of course, it's a dangerous game, and here we're talking exploration. So Quinton Henning is advisor to El Oro. He likes it. He thinks it's going to be massive, and it could be something like the Potosi deposit. But who knows? The drill bits will tell the truth.
Christopher, what are some of the factors for assessing a junior silver miner, their junior space? How might that be different than assessing your regular run of the gold junior? Obviously, silver also can be a byproduct for metals like zinc.
Yes. In fact, zinc has been a bit of a spoiler in the past for silver. Because while silver's price was down around $13, $12, $14, zinc mines were still producing, albeit not making a lot of money, but they were churning out silver that really would have been better to have kept in the ground because of the long-term perception that silver was going to improve. But the economics dictated that they had to keep producing. Now, of course, we've got zinc a lot higher, except for the recent days when it's been a bit battered, but that has helped as well. But really the problem here we have is that silver has been down and out for a very long time. While I referred before to the 2011 spike, it was really a spike. The price went from a level that was low to a super high level very fast and then back again. And with zinc, zinc has not been a performer really since around 2006, 2007. So even before the crash was where its most recent decent highs have been. So there's heavy underinvestment and in both metals. And so we've seen that the pipeline of new silver mines has been very thin indeed. We've scarcely had a listing of a pure silver stock since 2012. In countries like Mexico, they've been well sort of defined silver properties like those are Cerro Las Manitas of Southern Silver Exploration. But despite all the years of drilling, their resource gets bigger and bigger and bigger, but it's not in production yet. So a lot of the work that was done in the period by the dogged enthusiasts in between 2012 and 2019 has not actually led to new silver mines. Whereas, for those of us who remember back to the previous decade, there was a string of new silver mines appearing in Mexico and other locations during the latter years of the first decade of this century. And since then, it's been very thin pickings. And the silver recovery is actually only in early days. I mean, we're only talking about a year since it started to perk up. And it's way less than a year since its recent highs. And with the whole pandemic going on, that has cramped the style of silver companies that were looking to go out there and get their exploration efforts going when finally they see a decent price. And to compound that, sometimes gold can suck the air out of the room for silver. And definitely gold's ebullience last year meant that all bets were going on the gold places on the roulette table. And silver was having to, sort of bask in the reflected glory, but that still was not as much money as was not even a fraction of the amount of money that was going to gold. Now the latest developments are comforting because gold's off the boil, and silver is perking up very nicely. So maybe silver will move to the front of the pack in the horse race, and people start laying their bets there rather than on gold.
David, is it a bleak production outlook for silver right now?
Well, last year when the health crisis hit, it was, I forget, but it wasn't Thomson Reuters, but it was one of the well-known analyst groups that put out that silver production was off 30% for about a 2.5-month period. Overall, the leaked number from the Silver Institute's about 7% for the year. So certainly there's been an effect. I think what Christopher outlined is something that most people don't think about, and that is with the current conditions, you're not going to see many explorers out there, doing their thing, which tightens the potential upcoming supply in the future. On top of that, the current administration in the U.S. is very, I'll call it anti-mining, because that's about as clear as I can be. You're really not going to see much new activity west of the Mississippi. I'm painting this with a broad brush, but I'm pretty accurate in what I'm saying. So I do think that the established mines, of course, I'm favorable to the juniors like everybody else on the panel. It's just that to think there's going to be somebody brand new go out and staking a new project and on, it can happen. But let's say there's a lot of wind blowing against that because of the current conditions from the administrative perspective.
We certainly did see silver mines disrupted just because of their concentration in countries where, COVID-19 restrictions came down hard, such as Latin America, Mexico, during that event. While I just have you, David, I want to make sure that we catch it, and then I just want to go around the horn before we get the outlooks. Can you talk about just the industrial side? It's not just about solar panels for silver, correct?
Correct. I don't want to be too long-winded. I don't want to take too much time, but go back 2 decades and the silver industrial use was 35% of the market. Today, the usage, according to the Silver Institute, is about 55, 60% of the market. So it's almost doubled in 2 decades. But what's more interesting is not only has the industrial side demand gone that much further, it's the fact that 2 decades ago, the total production was about 550 million ounces on an annual basis. And today it's about 850 million ounces on an annual basis. So we've had an increasing demand on the industrial side that's rather significant. Will it level off? What's the trend? What's the future? I don't have a crystal ball. It's obviously up for the near future with the EV market and the push toward green energy.
Ian, how does silver look to you from the industrial side?
Yeah, well, the interesting thing is, I think certainly the silver, the demand for electric cars, water purification, with another big potential use of silver, solar panels. If Biden's going to turn the US into one big solar farm, which he's sort of making noise about doing, then and turning off all the petrol and stuff, which is just what they say. But at the same time, all these environmentalists are trying to clamp down on mining activity. So the whole thing's totally perverse, because if you don't get copper, you don't get any electric cars, period. You can't make an electric car without 4 times as much copper as a petrol car. And likewise, so at the same time that you're seeing potentially massive, the electrification in decarbonisation produces massive demand for these metals, the environmentalists are trying to clamp down on the supply of them and not have any mining. And they're saying, so the whole thing's totally logical. If you don't have these metals and increase in amounts, you're not going to get the decarbonisation that the environmentalists want. So, the classics, go slightly off piece a bit, is oil.
everyone thinks that the move away from oil is bearish for oil. But what they're doing, all the environmentalists are clamping down on the oil supply, not on the oil demand. So you're going to see much higher oil prices as part of this general commodity boom, because it's the supply that's going to, the environmentalists, they're stopping the banks and pension funds from investing in oil, not buying oil bonds. So the oil companies are going to be starved of investment. The flow rates from the oil wells are going to dry up and diminish, and then you're suddenly going to see oil at $80, $90, $100 a barrel, when in fact the world's supposed to be moving away from oil, and the electrification is bearish. It's supposed to be bearish. It's going to have exactly the opposite effect, and the similar sort of effect is going to be in silver. They clamp down on silver mines everywhere for environmental reasons. It's just going to push the price of silver even higher, and that's one where the demand in the future is going to be greater, not less. So.
Okay, you've convinced me. Silver is looking good right now. So, Claude, there's a number of ways to invest in the metal. There is buying the physical silver itself. There's the ETFs. There's the miners, and then there's also the juniors. Can you step back and then kind of like assess all of these investment opportunities for silver?
Okay, well. So of course, the basis is always to start with having some physical silver. And so, either you park it somewhere in your garage or in your garden or in your safe deposit box in a bank or whatever. I live in Switzerland. There's a very convenient mutual fund, which is quite safe, which is called the Zürcher Kantonalbank. So it's ZBK. And they have silver, and the silver is it's like you own the silver. If you want to get the silver, they send it to you. So it's pretty safe way to have silver, physical silver. So you park that for the long term, and you don't think about it. And of course this is just for speculators. Then you go into the mining stocks. And then in the mining stocks, you have, different categories, of course. You have the big caps, you have the mid caps, you have the small caps, you have those which are producing, non-producers. So probably the best, so as Ian pointed out, where there is the most value today is in the lower you go in the food chain, the cheaper the companies are. So, but of course, the risk is there also much higher. So probably the best way is just to do the mix. So you have some big producers, and here I would concentrate on the producers which have growth. And there's really not so many around. So I don't know if you want to talk about different stocks. Maybe we can come back to there later. But so I would have a mix of producers, preferably with growth, because there are so few with growth that there'll be a corner on these things and they'll go ballistic. The prime example is Endeavor Silver, which can double production in the next couple of years, and by 2023 or something like that. And then have special situations where you're not too dependent on the price of silver, more difficult to find, and then the juniors, which will all go ballistic when because in all these bull markets they always end in a mania, and the fundamentals have never been as favorable as for gold and silver. So I think we're going to have the mania of the manias, and what we're seeing in some parts of the tech bubble, we'll probably see another bubble now with the mining stock. And Ian then will be a hero, and he'll probably certainly one of the best performer in that category.
Christopher, invest in a mix?
Well, I don't think, short of physical silver itself, which because of its low denomination and its sort of bulkiness, unless you're looking for a post-apocalyptic scenario where you'd actually want to have your hands on the silver, I still think that the silver physical ETF SLV is the best way to go. Unfortunately, some of the up-and-coming silver miners claim that they're wannabes, but some of them are never gonna be's because they'd prefer to be bought. and you know, there's always a class of producer, particularly in Canada, or a class of promoter, particularly in Canada, that it may mouth words about wanting to get into production, but you know, it's a case of see what I do rather than what I say, because many of them are just waiting for a buyer to come along. And the question is, if their project is not that big, then the giants of the industry, whether they're, you know, Pan American Silver and that ilk, are not going to be buying a mine that's only producing 1 million ounces a year of silver. And they're not going to be even interested in a mine that might produce that much, but isn't even in production. So that is a problem. You know, those companies would only be acquired by consolidators. So I think we need to see a few of the companies that are advanced, like Southern Silver that I mentioned, actually move over into the production category. And they're not particularly showing those signs at the moment that that's what they want to do.
David, break apart the areas where you can invest in silver.
Well, pretty much a repeat of what Claude already said. I mean, what we've done the Morgan report from day one is big money goes into top tier cash rich unhedged companies, mid tiers, mid money, and then we like to speculate like everybody else, but that's bet a little to win a lot. I've picked more mines in the speculative side, or excuse me, more investments on the speculative side that have become mines than anybody else in the industry. But believe me, I have a lot of wallpaper to go along with it, meaning stocks that have gone from at 12 cents that were a sure bet to $12, it went to zero. So you got to be very careful throughout the sector. But if you follow what I have learned the hard way years ago and do the outline that, again, Claude's already mentioned, and I also am reinforcing, it's a great way to go, especially on the top tiers, from my perspective, because you can write covered calls on them and you can get a cash flow off a high beta stock that's phenomenal. You can get like 25, 30% a year and just hold the stock the whole time. So there's a lot of ways to play the market.
Ian, I should bring you in this as well too. Can you look at the tiers for investing in silver and how you look at those conceptually?
Okay, well, we've never really got into the junior space up until the last 6 months. So this is a new sort of move for us. But we've allocated about 20% of the fund into 20 different sort of junior silver miners, and take fully on board that there's a lot more reward in this sector, but there's also a lot more risk. So we've covered that off, not by sort of trying to cherry pick one or two favorites, but just spread the risk across 20 different stocks. And okay, one or two might not make it. I don't really, if silver goes up, they should all make it. None of them should go bust if silver goes to $30, $35. But assuming one or two adverse things happen to, say, maybe one or two, that should be more than made up by the money you make on the other 18. And one or two of those 20 stocks are going to be 20, 30, 40 baggers. We're just not sure which one they are, because and that's why we don't want to sort of be trying to be clever and trying to pick the winner. Let's just have a broad blunderbuss approach to the junior sector, because we know the beta, and that's where we just know that's where the money is going to be made. So we come having a fund that was exclusively in big cap and mid cap. We've now put a decent chunk of the fund into these small cap ones, because it just feels right that this is where the maximum performance is going to be. So that's what we've done, and we've covered off the risk by having a wide selection of them, rather than just try and pick one or two winners.
We have under 2 minutes left. I just want to go quickly through the panelists. We're at $26 an ounce gold. Sorry, $26 an ounce silver. Claude, where do you see silver a year from now?
Look, I'm not going to pick a date because that's too difficult, and everybody knows it's impossible. But in the last bull run, silver went to $50. I think in this bull run, it'll go over, way over $50.
Christopher, do you have a forecast for the price of silver
for next year, or for the end of this year? You know, closer to the 30. The only scenario in which I'd see silver at 50 is pretty much a scenario where it does really become the favorite of everybody on Reddit, or the Hunt brothers rise from the grave and try and correct their errors of the past. But I think as we saw when the Hunt brothers did their thing, there's a lot of silver in people's cupboards that would resurface and end up being melted down. There's a lot of cheap silver jewelry that people bought that could come flooding back into the market, but it just wasn't worth it, $13. At $50 it would be. So we'd see all that stuff coming back. So hang on to those silver teaspoons.
We're getting. I just gonna have to get this very quickly. David, what do you see as a forecast?
I've said we can see 35, maybe even touch 40 this year, and I'm more bullish than that longer term.
Yeah, and Ian, I think I saw a forecast from you at around 36.
Yeah, but I think I'd be in the Claude camp that I think we're going to take out $50 and go up to 60, between $60 and $80 over the next year or two. So
that's terrific. Sorry, I'm just getting the hook right now. My name's Michael McCrae, Mining Audience Manager with KITCO. I want to thank our panel. This was terrific having you all really on a great news day for silver. We've been with David Morgan, with CEO and founder of the Morgan Report, Christopher Ecclestone with Hallgarten and Company, Claude Bejet, junior mining newsletter writer, and Ian Williams. He is a Charteris, Treasury portfolio managers. Thank you very much to Minds and Money for hosting, and safe investing.